This video is about paper trading on day trading using double volume. I did a previous video doing the concepts of double volume. I hope to remember to put that in the notes on this YouTube video. But this is I'm really excited because this is like after 2 years I'm writing this program and testing it, and making changes and testing, and making changes. This is sort of the culmination of 2 years where I finally think it makes sense. It's working. I did 6 paper trades in a row today. Wish I would have done real trades. I could have made thousands of dollars today, probably. Again, in day trading, people look at it as like you can make little bit of money here, $100 there, maybe $200 there, $300 there. But you have to have $10,000 or $20,000 to play with to make that kind of money. So what you're trying to make is anywhere between, when you paper trade, anywhere between 0.5% of interest, like interest type thing, 0.5% of gain, up to maybe 5% of gain in a trade. That would be a really good one. This is like my paper trade. I'm going to do 6 different stocks, and again, the most important things when you trade and use this method, and probably any method, there's 2 rules you have to remember. On a downtrend, always short, never long. If it's an uptrend, you always have to do a long, never short. Okay? So that's not me saying that. That's other people said that, and it kind of messed me up in the past because I didn't listen to that. I tried to use my indicators to tell when it was go up or down. So like, when you have a trend, you have these things called pullbacks. Okay, so this is a downtrend. So it reaches a peak, it pulls back, goes back up, goes back, goes back up to the top. And so what you have, you can even put a trend line, which really helps. See, I'm going to go to that peak. You basically connect the peaks. See, that's the trend line. So now you can see that the price dips down. That's called a pullback. Then comes back up, hits the line, pulls back down, goes back up and hits the line. So you can use these trend lines to figure out roughly what's going on. And all right. When you do a downtrend, again, we're looking for double volumes, and sometimes the momentums for the double volumes saying they're red means they think it's going to continue to go down, and on the other case, there's only 2 cases that on a double volume, either the momentums will be red, mean it's going to go down, it thinks that it's going to go down, or green, thinks it's going to go up. Okay, but what I found out is on a downtrend, when the momentums are green, saying it's going to go up, what that really could mean, in addition to that, is that what our people are doing is they're buying or selling stocks to get out of a previous trade. So the green momentums mean there's people are buying, right? But the issue is like if they shorted here, which would be selling short, and then down over here, somewhere over here, they bought to cover, the momentum would show green to show that people were buying stocks, which means covers. But on a downtrend, green means buy to cover, which means they're getting out of the trade. They've taken their profits to get out of trade. So even though it says green momentum because people are buying, they're getting out of their trade. They're getting rid of their stocks on a short sale. So green momentum means the price will probably still go down. On the other hand, if you have a double blue volume, this would be a double blue volume here. See 2 blue triangles, and the momentum squares above it are red. That means there's a lot of volume and people are selling their stocks, which also means the price is going to go down. So on a downtrend, on a double volume, whether the momentum is green or red, either way, it's going to be, the stock is going to tend to go down. Does that make sense? Okay. So So let's look at that. I'm going to zoom in. Something like that. Okay. Here's our first double blue volume. And it really doesn't matter these momentums in case. The last case is a green momentum. And that, like I said before, is probably people are buying to cover. They had done a short sell previously, and now they're going to buy to cover. So they're buying stock, but it's only buy to cover. Basically, they're getting rid of their stocks. So it's going to, basically, that's why the price goes down, because they've gotten rid of their stock and the price is going down. And this is, so now we're trying to find the bottom of the pullback. It's not real important, and then it's going to go back up again. Basically, after we find the double volumes, we look for single volumes, single blue volumes. And this one says it's going to be green momentum. That's important because that means it's reached the bottom. It's still going to go back up. So I go pullback question mark, heads up. It's still going up. So it's going up. The next blue triangle is, sorry, the next one's right here. Blue triangle and red momentum. So that's trying to say it's time to enter. So this was the peak, and I pulled back down, and that green. So I entered here. Obviously, if we would have known the future, this would have been a better place to get in. But it's okay. It still works. So we got in here. This was our enter price. Now we're trying to see when to exit. Okay. We're looking for blue triangles, and there's a green. Means it's going up. So it's time to worry a little bit. We could sell here and take a loss, or just be a little bit patient. The next one is we'll be a little patient. We see it's going back down. It's like, woo, it's going back down. This, of all the examples, this is the that I'm going to give today. 6 examples, 6 stocks. This is the most trickiest one right here. We got a little blue, a top T for top here, and we got these little green. Okay, this is a green dot circle, and this is a red dot circle. This means all the stars are aligned for it to go up. 2 candles later, it says all the stars are aligned to go down. This resistance line, trend line down here, kind of was helpful, wasn't it? Because it tells us, hey, this is just a pullback area. It's going to be a little congestion. We keep on looking at blue triangles. This is, we figure it's going to the top, and it's going to go back down. We got a blue triangle with a black square. Black square is neutral. So let's keep on going. Here's a blue triangle volume, black square neutral. Blue triangles, and they're both momentums are red, so it's still going down. I'm going to zoom in again, guys. Alright, I remember where I was. Blue, black, neutral. Blue, blue, red, red. Red means going down. Blue, red, still going down. Blue triangle, volume, green, momentum. This would be a good time to exit. So when we look down here, our next candle we get out is there. So we're exiting here. So this stock went from 13 point. Our profit is 13.8 to 13.95. So roughly 15 cents. So this is a 1%. A 1% delta gain. So if we had $10,000, we would have made $100. If we had stock, if we did option and did a day trade, we probably could have traded only $1,000 investment and made $500. So we make 50% on that. I haven't option traded, but from the videos I watched, that's cool. So and when you do option trading and you do day trading option trading, that's less riskier in a lot of sense, because with option trading, if you do the long-term trading, you enter and you don't do the trades for several days later. Every day you do it, you're losing money. So doing day trade, you're not going to lose any money because you're not holding on to the option. So, anyways, let's look at the next stock. Hopefully, this will start going faster now. The long-term trend, you can see it's down, right? So now we just got to zoom in a little bit. Okay. Zooming in. I'll get faster at it. I will. All right. Here's our double blue enter point. This is like where we need to think about getting in. And you notice it's again, it doesn't really momentum. It's a downtrend. So whether we have on this trigger, let's call this a trigger. We have double blue triangles. That's the trigger. Then the momentum, whether it be red, in this case it's red, or green, it doesn't really matter for entry point. We're trying to catch the pullback. So here's our trigger, and by look at, there's actually 3 volumes in a row, but they're all red. Then the next one is a green, which means in other words, we've hit the bottom and now it's going to start going up because we got a green momentum. So we got a still up because we got a green momentum. And anyways, the next one's a green, so that means it's still going up. And the next blue triangle is a red momentum. This is our indicator to go up to enter this thing, because now it's going to go down. In other words, here's our trigger. It went down, pulled back, now it's gone back up. Now this is our confirmation that the thing's heading down, so we can get into the next candle down here, and this is our entry point. Now we start looking at blue candles. This is a red momentum. See if I can zoom in a little bit. A red momentum there, continue go down, and a red momentum square go down, red momentum square go down. This is a green momentum. This is our indication to get out. When you do your exit, I might encourage you to think about being a little bit patient and look for the next candle. Wait for the end of the next candle. These are 1-minute candles. Next one says red, so that means it's still going down. I gotta move this out of the way because it's in the way. Okay, and then you wait the next one and it's red, so it thinks it's still going down. So we could either exit on this one here, or if we were a little bit patient, we could wait a little bit longer and exit on the next green one. So again, when you have each candle has a blue triangle in a row, it's the last one that's the important one. In this case, the last one is red. So now we look for the next one here. It's a blue triangle volume with green momentum. That means get out. The next one here is black, so we could probably get out right there. So it's interesting though, if we get out here, which would be the same point as if we had got out with the first green one there. So either what we did, if we would have got out the first green momentum or the second green momentum, we would have got out at the same point. So this one, our profit is 30 cents, like 45 cents. So this is about a 1.5 or 2% gain. Alrighty, this is a downtrend. Here, like you can tell, it's a downtrend. But we got to zoom in a little bit. guess we got to zoom in a lot. Here's our double, triple volumes with, again, on the trigger point here where we got to start looking about getting in. Whether it's green or blue momentums, I'm sorry, green or red momentums, it doesn't really matter. We're going to do a short. So here's a U, which means the thing's going to go up. Is this a pullback? The answer is no, because we need to have a blue volume. So this is sort of a pullback, but it's not where we want to enter. We want to enter on a single blue volume. Alright, so here we got a blue volume with a red momentum. This is confirmed. Even if we wait for the next one, it's not a blue triangle, so we could enter on even the next one. Because since this isn't a blue triangle, this is really the real one. And so even if we waited, that means we had to go enter the next candle. But in this case, you see all the three candles are all about the same length, so we enter at the same level there. Now we have to figure out where to exit. So you entered here, and you got all those tops. The next blue triangle is black momentum. That means neutral. And this next blue triangle is red momentum, means down, plus we have all these tops. So this is just like a confirmation that things are going to head down. Next blue triangle is a red, down, continue going down. Next blue triangle is red, continue going down. Black is neutral. Here's another blue triangle. Red is going down. Red going down. Red going down. Here's a blue triangle with green. So that's a good exit point. So this is like time to exit. If we wait one more on our exit, it's a black triangle, which means that this was indeed valid, so our exit point could be there or there. There, those two. Look down at the candles, exit point would be either there or there. So I probably should put it there. So anyways, 27, 10, and 26. So this is basically $1. So this is a 5% trade right here. So if you had $10,000, 05, it's 5% times $10,000. You would make $500. If you were doing options and you had traded $10,000, you would make $10,000. So if you want to do normal short day trading, you would make 500 with 10,000. Or if you want to do options, you could make 10,000. How about that? Next one. Long term, you can see it's a downtrend. Never do a long, always do a short. Okay, that's where I'm looking to go. Yeah, that's it. That's it. We got the whole trade in there. Okay, blue triangle here and blue to there. That's our trigger point. That's where we think about getting in. Then over here we got we don't really have no momentum here, so we don't know for sure. We're looking for blue triangles with red or green momentums. Okay, so here we got blue triangle with red momentum. It's going down. So I think our entry point is really right here. The next, yeah, candle there. Okay, so that's how we get an entry point. Now we just look at the blue candles, the blue triangles, blue, but we got black momentum, blue, black momentum, blue. We're looking for entry point, green momentums. But again, on our exit point, we're going to be patient and look for the next candle after the last blue triangle. This blue triangle is red, and that's the bottom line. It's a red. Things are going down, and then the next one's red. So this is a confirmed red. Confirmed it's still going down. Next blue triangle is red, still going down. Next blue triangle is red, squared momentum, still going down. Red going down, black neutral. Red going down, 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 black neutral, red, black, black. Here's a red one. All these things that say top, that's also a great indication that things are going down. Red going down, red going down. We're looking for green. There's the green, right? We wait on exit, wait one more. See that there? It's black, so that means that green was valid. So we get out on that square there. So it's not quite as good. Activate. There. That's where we get out. 1715 to 1760. Oh, 1725. 60. So it made 35 cents. Let me show you the calculator again. 0.35, and it's divided by $7 stock. 0.35 is a 35-cent profit we made. And then you times 100 to get percent. That was a 5% trade. So that, if you had 10,000 bucks, you'd make 500 bucks right there. So hopefully this is making sense to you by now. Right? So, tell this is an uptrend, right? Boom, boom, boom. See, when it starts out during the day, it's hard to tell what the trend is. Looks like it's going up, then it goes down. So now is it a downtrend? So what you do is you look at the peaks. Let's see this low here, but then there's a lower there, so that looks like a downtrend because this low is lower than that low. But this peak here is how that's a lower high, so that looks like a downtrend. But then it reverses itself. See this lower peak here? Then there's a low peak there. This is lower than that one, so it's an uptrend. So right up there is the first real confirmation that it's going up because this peak is higher than that. See, when higher highs, and this is a higher lows. So even this valley here, this low is higher than that one, so it's still good. And this is the low, and then it starts going up. So we know that this is an uptrend. Right there, that's our first time we can say that it's an uptrend. Now with that in mind, you can see the uptrend going up, and then here, now from here on it's going sideways, so we don't really know. This one it's like here's a high, goes down low, high, so this high is a lower high, so maybe this is the start of another downtrend. Here it's going sideways. So obviously our point we want to get in is down here, because by this point is established uptrend. If that makes sense. This one's a little tricky, only because if we have a little bit of patience and look at some of the indicators, we would know that it's we would know that instead of making 2.5%, we can make 5%. If you're conservative, we'll make 2.5%. So here's our trigger, two blues. We don't care if it's red momentums or a green momentums on the trigger. And so what we're kind of doing is we're waiting for a blue triangle. That's the whole thing is. Well, the first blue triangle that we hit is this one. That's it. But the momentum's red, so that doesn't even work. So this could, in one sense, could be a failed trade. But like I said, if we look at the other indicators, I think it wouldn't be a go. Well, first off, see these 3 B's in a row? That's really powerful. If you see 3 B's in a row, that's telling you that my program thinks it's going to be going up. And this is the bottom, right? So it's going to go up. If that's the bottom, then things have to go up. So that's one indicator. Again, we know this is an uptrend, so we know it's got to go up, and this tells you it's going to go up. Also, if you look at these black neutral ones, we got a whole bunch of green momentums. Boom, 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 boom. So this is like accumulating lots of green momentums. If the momentums are going back and forth like green, red, black, then it wouldn't be such a good thing. And then the top 2 rows here represent trend lines. The top row represents a long-term trend line, and the second to the top row, this one here, is short-term trend line. So when you got both of them being, both trend lines, long-term, short-term, both having green squares, that means it's an uptrend. Without a doubt, it's an uptrend. So if you looked over here, so you got one of the long terms red. It's not an uptrend. Even though the short term might be green, the long term is red. So that means it's congested, I guess, and you can see it's kind of going sideways, which is congestion. But here both are in agreement. Both trends are going up. We got the bottoms here, so we can enter right there, or not enter if you want to be really safe. Anyways, I feel pretty good about that one. I'm just kind of zooming in here. So we enter here, and the price is going up, price is going up, price is going up, and we get a first blue triangle. We wait for the next one. It's red, so that confirms that the momentum here was red. Means it's going to go down. So we could exit right there. Actually raise it up a little bit. We would probably exit right about there. And that's conservative. And it's 21.35 and 20.87, so about 45 cents, half a cent. So this is about a 2 or 2.5% trade, and there's nothing wrong with that. But it's not a I don't know. If I suppose that would be the trade, and that would be conservative. We know that we're an uptrend, and if you wanted to be a little bit patient and you draw this trend line and things are going up, some people just do this trading. They draw the trend line so that you got the pullback up, pullback hits the line, up, pullback hits the line, up, pullback almost hits the line, up, pullback crosses the line. Some people, when on uptrend, this is what they wait for. Wait for this line to be, the uptrend line to be broken. And at this triangle right here, a bunch of trade happened. But when it fell back down, it didn't reach the line. See what I'm saying? Didn't break through it. So you could wait if you wanted to use that methodology. It's probably advanced day trading. You wouldn't have sold out here, but rather, made you 2.5%. We would have sold maybe here, waited for it to break the line there, or we would have used our indicators. Let me zoom in so you can see zoom in on this. We got another. This is a blue triangle. So there's all these blue triangles up towards the top here. See this one here? Blue triangle with a green momentum. That means it's still going up. But now we got a blue, two blues with two red momentums. That's telling you it's time to get out. It's time because it's going to drop. So we would wait for the next one and try to get out here, because or even here, because we'd wait two blue triangles, wait to see if this one will be blue. It's not. So that means these are valid. So we'd get out on that one right at the top. Does that make sense? So if we did that trade, it's 21.9, which is like almost 22, and this is like 29. So this is like a $2 gain. 22.20, $1. So this would have been $1 gain per share. So this would have been at $20 shares. This is a 5% gain. So I said this one's a little bit tricky. The entering is a little abnormal because we didn't see the single blue volume with a the right color momentum. So we entered a little bit differently. We continued a little bit differently instead of exiting here, and we got out up here. Okay. So that's a little bit advanced day trading. This one you can see the trend lines going down. Did I look at this one already? I don't think I looked at this one. So we know it's a okay, we know it's a downtrend, so we never long. We need to short. Here's our trigger. Again, on the trigger, the two blue volumes, double volumes, we don't care if these are red or green. It's gonna go down. Goes down, boom. We got a red, which means a blue triangle red means still thinks it's going to go down, but it doesn't. It goes up. Another one means it's going up. Again, it's heading up towards this trend line. Another green momentum going up. A black momentum meaning neutral. Here's our first red one, means it's going to go down. So we've reached the pullback. It's pulled back, reached the top, and it's hit that red one. We got a red circle. This is a confirmation it's going to head down. So our entry, we wait. The next triangle. Oh, on our entry we don't have to wait. So this is our entry point. We don't have to wait. We just get in on the next candle. That's our entry. So it's actually a little bit higher than that. Our entry is like right around there. Now we're looking at for the blue triangles. There's the first blue triangle and it's red. Means it's going down. Here's a blue triangle with black, neutral, red going down. It's cool. Here it is on the exit. All right, exit green. We're gonna wait, be patient. Blue exit green. Blue neutral. Next one is black. So it's time to get out. Its stock's going to go up. So I guess our exit point would be after this one, would be right on this candle there. Alright, so basically made from 16 cents to 37 cents. So basically 20 cents on a $15 stock. This would be 2%. That's it. That's day trading on double volume. I think it looks good, guys.